Hello and welcome back to Money Never Sleeps. My name is Mac from M&A Wealth. If you'd like more information about what you hear during the show, give us a call at 866-973-3627 or visit us online at mnawealth.com. And while at my website, click on the page to check out past shows and subscribe on Apple Podcasts or Spotify. During the show today, we're going to look into the breaking news that the 2025 Social Security cost of living adjustment will be 2.5%. A CNBC article, Social Security Administration announces 2.5% cost of living adjustment for 2025. Lowest increase since 2021, has some timely details. The cost of living adjustment, more often referred to simply as COLA, came with both good news and bad news. The good news is that nearly 73 million Americans will see their monthly Social Security payment increase by 2.5% in 2025. On average, according to the article, most people see an increase of about $50 a month. The bad news is that that's the smallest COLA increase since 2021's 1.3%. Thanks in part to pandemic-sparked inflation, in 2022, the COLA was 5.9%, and in 2023 it was 8.7%. The 2024 COLA was 3.2%. Each year, the COLA is calculated based on a portion of the Consumer Price Index called the Consumer Price Index for Urban Wage Earners and Clerical Workers, or CPIW. The percentage increase in the CPIW from the third quarter of the previous year to the third quarter of the current year determines the COLA. Let's next take a look at how you may be able to determine how much larger your monthly Social Security payment will be. If you're currently receiving Social Security, you can get a solid approximation of how much your payment will change by multiplying your current monthly amount by the percentage increase, which again is 2.5%. If you want to be more precise about how much larger your monthly payment will be in 2025, it's helpful to consider Medicare Part B premiums, which are commonly deducted right from your Social Security payment. The standard Medicare Part B premium is projected to increase to $185, which would be a jump of about $11 a month from 2024's $174.70. That projection is via the Center for Medicare and Medicaid Services, which is the federal agency that runs the program. You can feel confident that projection is likely to be accurate, but it's still just a projection. Additionally, the larger your Social Security check, the bigger the increase you'll see in your monthly payment. And because benefits increase by 77% if you wait to file from age 62 to 70, the COLA increase is only further evidence that waiting as long as possible, up to age 70, to file for Social Security can have very real and very lasting advantages. Currently, the full retirement age is 66 and 2 months for people born in 1955 and gradually rises to 67 for everyone born in 1960 or later. As I tell my clients, and the article backs up, the age at which you initially file for Social Security is the single biggest factor that determines the amount of your monthly payment. The Social Security Administration will notify recipients about their new payment amount through traditional mail beginning in December. And this year, the administration is supplying a new one-page COLA notice that will detail benefit amounts, including any deductions, and the precise date your 2025 payments will begin. COLA statements are also available online. However, recipients must have a My Social Security account before November 20th to see their notices. You can create an account by visiting ssa.gov/myaccount. Your financial services professional would also be able to help you set up an account. When I sit down with a client to discuss their financial strategy and retirement goals, it's very common for them to list Social Security as their biggest concern, and with good reason, because in many cases Social Security is a significant part of a retirement income plan, regardless of how many other assets and income sources you may have. As we work together, many clients are honestly surprised when I explain that there are actually several steps they can take to increase the amount of their monthly Social Security payment. During this segment, I'll share many of the things I discuss with my clients about Social Security. A U.S. News and World Report article, 10 Ways to Increase Your Social Security Payments, agrees with many of the things I highlight with my clients. First, because your Social Security payment is calculated using your earning history and how old you are when you file, it's possible to increase the amount of your payment by waiting to file until you're older. The total length of your career is also a significant factor when it comes to your future Social Security payment. Critically, you should work for at least 35 years because your Social Security payment is calculated using your 35 highest income years. If you don't work for at least 35 years, your non-working years are calculated as zeros, and that means your monthly payment is going to be smaller. But of course, that formula means that if you work longer than 35 years, a larger earning year will cancel out a smaller earning year when your future payment is determined. That means that summer job at Dairy Queen when you were 17 will be replaced by a year when you were working in your chosen profession. Focus on working for at least 35 years, and if your career lasts longer than that, set a goal to increase your annual salary as much as you can. While pushing your annual salary as high as you can is always a smart play, with regard to Social Security, there's a maximum amount of income that's subjected to the Social Security tax and therefore used when tabulating your future payment. And, as this episode has made clear, that amount can change because of inflation. In 2025, earnings up to $176,100 will be used to determine your future payment. Anything higher than $176,100 isn't taxed by Social Security and therefore won't impact your monthly payment during retirement. While you may file for Social Security as soon as you turn 62, I generally urge my clients to give doing so a lot of thought beforehand, because if you go this route, your monthly payment is going to be smaller forever, except for COLA increases, which aren't automatic year to year. The full retirement age was 66 for people born in 1954 or earlier. It then increases in 2-month increments for people born in 1955 to 66 and 10 months for people born in 1959. The full retirement age for people born in 1960 or later is currently 67. As the U.S. News and World Report article explains, your monthly payment continues to increase by 8% a year after your full retirement age until you hit 70. After you've reached that milestone, there's no longer a financial incentive to keep delaying filing. Let's use some real-world numbers as an example. Let's say you're set to receive a monthly payment of $1,000 when you turn 67. If you hold off on filing until you're 70, your payment will jump to $1,240 a month. That bigger monthly payment amount is for the rest of your life and would increase whenever there's a COLA bump. On the one hand, $240 a month may not sound like a ton of money, but for some retirees, an extra $240 a month can go a long way in terms of groceries and utilities. If you have any questions about the new generation retirement system, visit my website at mnawealth.com or call my office at 866-973-3627 to discuss how my team might be able to answer your questions and address your concerns. It's our goal to help you prepare for the retirement you've worked so hard for.
Disclosure: all matters discussed during the show are for informational purposes only. Opinions expressed are solely those of M&A Wealth and staff. All topics covered are believed to be from reliable sources. However, M&A Wealth makes no representations as to its accuracy or completeness. This commercial shall in no way be construed as a solicitation to sell securities or advisory services to residents where permitted. Topics should be discussed with your individual advisor prior to implementation. Advisory services offered through M&A Wealth, a registered investment advisor in the state of Texas. Insurance products and services are offered through PNC Life Insurance Agency, an affiliated company. M&A Wealth and PNC Life Insurance Agency are not affiliated with or endorsed by the Social Security Administration or any government agency.